This episode is made possible by NetSuite by Oracle and Brex, the AI-powered spend platform.
Hello, this is Dayton Kellenberger, CFO of Vendavo, and you're listening to CFO Thought Leader Podcast.
This is episode 1020.
We have a very rich roadmap of what we're trying to accomplish. We take our mission seriously, and we think that the opportunity to bring a whole suite of tools of financial wealth making to Americans and abroad doesn't exist in the way that we want to do it from a systematic approach. So how do we do that in the most focused way? How do you put the most amount of wood behind the fewest arrows to have the biggest impact for the customer, but to do it from an efficiency standpoint, to do it with the resources that we have, to think about incremental investments in a thoughtful manner so you can drive great customer behavior, great economic opportunities for the company, but be able to also leverage our profits all at the same time.
Hi, it's Jack. On today's show, we speak to Seth Wunder, CFO and President of Acorns. At a recent executive team dinner, several Acorns executives reminisced about their professional aspirations from childhood. While most shared dreams that lost their luster along the way, astronauts and such, Seth Wunder told his colleagues he never gave much thought to being anything but an investor. In fact, as a teenager, Wunder was already engrossed in financial markets, landing him on a path that would eventually lead him to Acorns, where he is today CFO of the pioneering investment platform. You'll hear that story and much more on today's episode. We'll begin after this. CFOs and controllers, does expense management feel like a necessary evil? It's time to switch to Brex. Brex automates and accelerates spend management with easy-to-use corporate cards, travel, expense management, and bill pay, all on one AI-powered platform. Brex makes it easy to boost efficiency and compliance enterprise-wide and free up your managers, employees, and accounting team for higher impact work. Top companies from startups to enterprises are using Brex to automate manual work and transform their finance operations. We're talking DoorDash, Robinhood, Airtable, and countless other industry leaders. Ready to join them? Switch to AI-powered spend management at Brex.com. Hello, we're speaking to Seth Wunder, CFO of Acorns. Seth, welcome.
Thanks for having me.
So, Seth, we always begin by asking our guests to look back for us. And what we're looking for are those experiences that you feel best prepared you for this role. When you look back, what comes to mind?
Yeah. Thanks, Jack. There are so many experiences that you build over the fabric of your career before you get to being a CFO, and doing it at Acorns has truly been a pleasure. I had 20 plus years of investment experience. A lot of that focused on tech companies, starting from the dot-com bubble in the late 90s and so on and so forth, under my belt before I joined Acorns, and then before I became a CFO. But I would say the last 12 of my career prior to joining Acorns, in terms of the experiences there, I was running an investment fund. And the full scope of running an investment fund has many facets to it that I think were transferable over to becoming a CFO. I mean, for one, you are running a holistic business, and so as a CFO, you're not just running a function, but you're obviously a leader at a company, and all of the responsibilities, messaging responsibilities, strategic thinking, and so forth, is very similar in that regard. But you also have a very much a 360 set of responsibilities in terms of who you're accountable to. You're certainly accountable to the customer at the end of the day and making sure the business is viable for the long term. You're accountable to employees, but you're also accountable to the investors, the board members, and you've got lots of constituents that you have to work with, partner with, manage for, and the like. And that was similar to my role in managing an investment fund. And then all of the companies that we analyzed along the way, like learning from the experiences of watching other executives and management teams manage public companies, focus on creating value for their investors and their stakeholders and the like. I really tried to leverage all of those experiences truly and bringing them over to Acorns, where I'm CFO.
And, I want to ask you to look way far back for us. And I know you went to Cornell undergrad, but it seems like you were already had your mind set on investing. Undergrad, you were applied economics and business management major. To me, that says, okay, he knew where he was headed. Am I right about that? Just from a quick glance, that would be my takeaway. Maybe you would tell me, no, actually, I had some doubts.
No, I'm one of the few people, and we've kind of joked about this internally at times. We had an executive team dinner where we all played the game of what did you want to be as a kid, and then how did that turn out? And it was actually kind of funny. Most of the people around the table had evolved from that childhood dream or thought or vision, however you want to think about it. I conditionally have kept a pretty linear focus as to what I wanted to do. I grew up in a household and a family that was focused on investing, focused on the growth of the markets. I'd been conditioned to that at a young age. Found it's a game, right? At the end of the day, so much of it is about how do you stay invested for the long term? How do you not let your emotions, lead you to poor decision making, and so on and so forth. And I really kept that thread. That being said, like in every career, as I'm sure you know well, nothing is totally linear, right? So, I was actually giving my niece advice last couple weekends ago over July 4th, where we were saying that, you can't call something finance or call something marketing. There's 1,000 jobs within that, right? And so, even though you can have an idea of an industry and attributes of that industry that could work well for your personality, there are little moments in time where you have to make a decision, this path or that path. And I've had those along the way as well. But yeah, at the highest level, definitely focused on finance for a while and have navigated the ins and outs of that professionally.
And looking just at some of the funds you've been involved with and how you sort of confidently move forward as an investor and as a portfolio manager in asset management, you never found, and I don't see it on your bio, you never thought about getting an MBA. It seems like you had already found your groove, and what's the point? And again, I love comparing you to other finance leaders or other finance executives who went back because they found they weren't content with what they were doing and they wanted to reinvent themselves. Going back to the point you just shared, you knew.
Yeah, I think an MBA has a lot of value to it, depending on either what you were doing before or what you want to do after. But I think you should be really specific to that. Because obviously there's an opportunity cost of time, there's the total cost of money, and those are considerations, right? So for me, I started in investment management. I enjoyed what I was doing. I thought I was on a path that felt like it was progressing in the way that I wanted it to. I did get my CFA along those lines, and so the CFA fulfilled a lot of that higher level, conditionality that you can do, that you have either the intelligence or the acumen to master a particular subject. And so that worked out well for me as being an appropriate substitute. I actually felt from my time at Cornell and then early in my career that I had built a pretty good network too. So you hear a lot of people say, I want to go back to MBA to build my network. And listen, that's fair if you're in advertising and you want to move into finance, you're in marketing and you're looking to go into sales, like, whatever that transition might be. But I felt like the network around me was pretty fulsome. So it didn't make sense for me. There have been points in my career though, where opportunities have come my way. I was actually telling the story the other day, and the company that was considering bringing me in eventually said, "Hey, by the way, you don't have an MBA, and that's a requirement to be here." And I thought to myself, um, well, that's kind of short-sighted if that's the way that they're judging things. So, highly successful firm, so that's their process, and that's okay. But then I thought, for me, I preferred the other path, and it's worked out well.
You know, your path is, can I characterize it as an investor's path? As someone who was an investor from the start, right up the ladder as you got more and more opportunities coming your way. Would you agree, or would you characterize your path differently?
So there are two traditional paths to becoming a CFO. One would be accounting, with the technical side of the CFO role. The other side would be the strategic side, whether you think about strategic finance, FP&A, the analysis, all that kind of stuff. So I think most people who come from, let's say, the banking background or the investment background like myself would be more from the strategic side of the equation. I don't have a CPA, right? Like I said before, I have my CFA.
But what's interesting for us is that not every finance leader has that experience as an investor. Share with us why that skill set is quite important for a finance leader to have. Explain to us.
Yeah. So when you're sitting in the CFO seat, right, I think you've got a certain set of responsibilities that are really important. One of them would be, how do you align the financial model over time to the best path of creating value, or the highest probability path of creating value? And what would be the risk mitigating moves and conditions of decision making that are required in order to also help take either downside off the table or give the company broadly flexibility in the decision making over time. That could be, whether it be balance sheet flexibility, that could be related to M&A, that could just be related to regular operating decision making. Sitting in the investor seat, certainly in the public market investor seat, but any investor seat for that matter, I mean, you look at hundreds, if not thousands, of companies over time, and so you get to see what good looks like. You get to see how businesses fail and make poor decisions. You get to see the differences between a highly functioning company and the executives associated with it, and conversely, the other side of that. And I think if you're astute and you're curious, and you can pull that all together, I think you can leverage those experiences to then sit in meetings internally and say, oh, okay, three steps forward from this meeting will be those types of outcomes. Does that make sense for us? And it's all of that that's transferable, that I would suggest to people to say, like, oh, okay, when I want to be a CFO one day, or thinking about where your career path is, it's the strategic decision tree that really, I think, comes to light.
All right. I just want to point out, you spent 21 years building your career as an investor before joining Acorns, where you step in as chief investment officer originally. And what's interesting, too, is I want to point out there were a number of firms you were associated with, but each time it was like an investment of 6 years. I mean, you're making some career year investments at every place you were. So it seems to me you have a rather solid reputation as you come forward. Okay, this is a different opportunity altogether. I'll switch gears here and we'll jump into that business segment, because I think we have to explain what the Acorns opportunity is and why you were likely attracted to this opportunity, and Acorns likely saw you as a strong candidate to be the finance leader. There's some obvious reasons for that, but tell us about Acorns. What is this company about? What is its offerings?
Yeah, so I think our brand has really done a great job of giving people awareness. But for those who are not, Acorns is a savings and investment platform where we focus on helping everyday consumers save and invest for the long term. And what that means is giving all of our customers the tools to have financial wellness for the long term, So we started famously related to roundups. So you could round up your spare change and have that move into diversified portfolios where we give people all the education necessary to understand how long-term investing in the stock market and the compounding benefit of time really can build great financial wealth for the long term. We've broadened the business significantly over the years, where we now also have banking features, including our partnership with Dwayne Johnson and the Mighty O Card. We've acquired GoHenry, which is targeted at helping kids learn how to save and bank and eventually invest, kids and teens for that matter. And it has moved us into the full family space, where now we serve kids, teens, and adults, and giving them lots of tools and a suite of products for long-term financial planning and investing. And we bundle that into subscription tiers based on value. So, we basically are putting people's money before ours and allowing them to approach all of the things that they're, either typically not comfortable with or first starting out, but really focused on the long-term benefits of being financially well. And for me, it's obviously a natural extension in so many different ways from where I came from historically. Plus, also, I can speak, I think, quite well from seeing people trade aggressively and the differences between the trading behaviors and what really long-term investing looks and feels like. And so I feel quite passionate about it. I also have 3 kids. I've got a 15, 13, and 9-year-old. And watching them begin their journey of financial awareness, financial education, their financial habits, which we know quite well that, developing really good habits at a young age helps people sustain those habits as they get older, whether they be physical habits, eating habits, and certainly, obviously financial habits for the sake of this conversation. And so holistically, my professional life, my personal life, is aligned to Acorns' mission, how we serve customers, and the goal of where we want to achieve over the long term for ourselves as well.
Now, I imagine, if you wouldn't mind, was there a recruiter involved here, or was this part of your network? I wouldn't be surprised that there was a relationship or somebody you knew or what have you.
Yeah, no, it was a relationship network based. And for me, one of the things that we haven't touched upon yet is when you're an investor, the analogy I try to tell people all the time, it's like going to a restaurant and being a food critic. You know a lot about food and you have a lot of strong opinions, but you're not, the chef sitting in the kitchen. And there's something really fun, strategic, difficult at times for sure, but that's, everything has its difficulties. But it's really fun being in the kitchen, being a part of the cooking and so forth. And that's the big transition from being an investor to an operator. So,
and again, you stepped in as Chief Investment Officer. Was there a CFO prior to you, or were you the first? Or
No, there was a CFO prior to me. We transitioned when I took over, and you obviously leverage the team, the processes and so forth that existed prior to assuming that responsibility.
So we'd like to ask, in that case, what is the chapter then that you're tasked with opening for Acorns? What is it that where are you taking this company as a CFO?
Yeah, so shortly after I took over as CFO, we were in process, and then we finished the acquisition of GoHenry. So that brought us into the kids and teen space. It brought us also into international markets. That brought us into the UK and France, Italy, and Spain. Mm-hmm. So a globalization of the business, a TAM or addressable market expansion of the business. It also brought upon a lot of integration responsibilities, pulling together teams, finance team for sure, but also lots of other functional teams and getting them to work together, realizing synergies across the deal at the same time. And I think it sets us up long term for whatever we might want to do. Today we're a private company. We'll see what that looks like in the future. And so all of those other considerations are in front of us, and they're fun challenges for me to work through with the team and so forth.
Have you added headcount to your team? Have you built out the finance function in some way? Maybe added some FP&A folks? What would you tell us?
Well, the nice thing about doing an acquisition is that you actually bring people into the company, right? So, with that, we obviously had a growth of the team overall. But what you also have the opportunity to do is to step back and say, what are we doing really well? And how do we scale and leverage the people and processes that we have? And so essentially, where can we drive efficiency? And so it didn't require us to add more people to, let's say, the finance team overall. But what it does require us to do is to think about things like common tooling, shared processes, leverageable reporting, shared communications, ways to organize our productivity to drive optimal efficiency and focus, to get centered on both process and outcome based decision making, and really leverage the parts that we do have, with the end goal being really high incremental margins. So as you grow revenues, you can drop more and more profits down to EBITDA and cash flow. And so that's been a primary focus of ours.
And I imagine part of what you're concerned about are your lines of sight into the newly acquired company that has been integrated into Acorns. At the same time, you have to keep a read on certain things that perhaps weren't part of the dashboard before, however you look into the organization. Can you share with us some of the numbers that matter as it relates to that acquisition? What are you looking at? And customer retention, what would it be?
Yeah, so across both businesses, and let's just talk about it as one business, it's predominantly subscription software at the end of the day. So we can have a lot of metrics that we can look at and really dive into the detail of them. But before you do that, I think the most important thing to the point of your question is, are the definitions the same? You often see, you can have a really good definition and it could be slightly different from the same definition in another company, and you can have very different outcomes. So one of the things we first did was, let's look at all common definitions. Let's make sure we're thinking about things the same way. Where do we need to make adjustments if necessary, or at least how do we speak the language collectively so we're referring to the same thing? Then it was about pulling together the data. So can we access the data at the same time? Is the data of the same quality? Is there noise in the data that needs to be worked out? And so it's like building a house, right? So you have to foundationally get your definitions and your data aligned. And then from there, you say, how do we report on it? And then how do we make decisions off of it? And so we've really architected the last year or so post the acquisition to drive to a solid foundation to then be able to make decision making on top of it. The key metrics are, I think, at a high level, relatively straightforward. What does it cost to acquire a customer? Is the customer happy, and what are they using? So what is their engagement? You can measure that by how long they stay, like retention. And then what's the cost of servicing that customer? And if you think of it, very logically and simply across those 4 points, you can drive growth, you can drive profitability. Most importantly, you make sure that the customer is happy. Happy customers use the product. Happy customers stay a long time. Happy customers advocate for the product they're using and tell their friends and drive more customers. And so there's the flywheel that you're trying to solve for straight away, which is customer satisfaction and customer growth. But then there's the economics behind that, which is cost of acquisition, cost of servicing, and so forth. So now underneath that, we have hundreds, if not thousands, of metrics that we look at, and you can look at it by, like I mentioned before, we have subscription tiers. So you can look at retention and pricing and upgrades and downgrade mix by each subscription tier. You could look at customer service, and there's probably 100 different metrics that you can look at within there. Same is true within engineering. There's customer-facing metrics, and then there's cost of reliability, uptime, latency, and all those metrics. And even though there might be engineering metrics, they're very much financial metrics. And so what we try to do is separate to what are the high-level KPIs that really give you insight as to how the business is doing, and then operationally, every week, what are those deeper level metrics, and how do you make sure that you're aware of what's trending in the right direction or not? And I think the abstraction between the two is really important for different types of meetings and different types of conversations.
Curious about this new segment of young customers that you serve. Did something surprise you when you learned more about the business that was acquired and how the customers behave and their characteristics? Were they strikingly different in certain ways than the more mature customers?
No, I wouldn't. No. So the way I think about that is not so much by, let's say, age. The way finance really tries to look at it is how engaged is the customer from the very beginning? And how do we work with product and design to help us all collectively understand that uh, engaged customers are happy customers. Engaged customers tend to use the product for longer periods of time, and that's no different whether it's a 15-year-old customer who's signing up for a debit card because their parents want to send them money and have functions of allowance and tasks and so forth, easily accessible for them to manage their money in a digital format, or the 45, 50-year-old customer who's coming to Acorns, who's a first-time investor and is willing and wanting to get started on their financial future and invest for retirement and think about the next 20, 30 years of earning. It's all the same, which is you want customers to onboard in a place where they understand what's going on, that they are engaged and curious about what are the features that we have in the app, and we're servicing them in a way where it's intuitive for them to understand such that they can use the full suite of products. And then universally, if we don't do our job, we see disengagement in a similar way, right? The same way my kids will put down a video game is the same way I might put down an uninteresting book, right? I mean, it's human behavior. So I don't see material differences in that framework, regardless of customer segment.
Just want to ask you about your FP&A team. Have you, over the last 2 years, have you structured that team differently? Have you given them any different marching orders? Have you thought to use them differently?
I think there's a couple of things that we've tried to evolve on over let's say the last year or two. One is, now that we have a larger business, you don't want the same team that was here and the same team and the team that you acquired all doing functionally the same things, right? Because that's duplicating work. So how do you build a culture of collaboration in order to help people advance in their careers by taking on broader responsibilities or different responsibilities? So somebody who is hyper-focused in a product segment, and you're like, that's amazing. But if I can get you to think at a higher level and have somebody work with you and create a laddering of team architecture, it gives somebody a chance to manage. It gives someone a chance to more strategically think across the business, and you try to repeat that process. We've also are in the process now of working towards common tooling across two different businesses that had different tool sets. And with common tooling comes cost savings from the software providers, but it also requires the team to sit down and think about the architectural roadmap of what it is that we're creating and getting into the strategic planning around that project. But it also gives team members a chance to collaborate better because without common tooling, it's just hard to share data. It's hard to share insights and so forth. So I wouldn't say I think we're more in a blocking and tackling phase of what a team architecture will look like. Where we are advancing knowledge and skill sets are, there are probably lots of opportunities in front of us to use AI within the FP&A and the accounting processes. And that's really about weeding out manual data processes and getting into automation and so forth. And a lot of that's still in front of us. But that's the other thing that we're in the midst of at the moment.
And is that, when you say AI, is that really machine learning? Would you characterize it as that, or is it just automation, or?
There's both. So there's simple automation, like if you looked at the reconciliation process, lots of ways to automate that. From an insights perspective, there's a fair amount of rudimentary tools today that I'm sure will get much better over the course of time, where they can start to drive insights for you. This is up versus last month and down. Here's why this was, and now you have the ability to edit, massage the messaging, validate first and foremost that's even accurate. But I would imagine the insight engines here will continue to grow, and that's one of the hardest parts about finance, right? You're looking at metrics that go up or down, and then you're trying to drive those learnings from deeper in the product set or deeper in the bowels of the business to understand why did that happen. To the degree that there are insight tools that can aggregate more data than, let's say, any of us are good at. That goes a long way to help people thinking at a higher level. So that's the other thing that we're focused on.
Excellent. Thank you, Seth, for answering a few more extra questions there. We're up to what we refer to as our finance strategic moment, where we like to ask you to look back in time and find one moment of insight, just one. I know you've had a few of these already today, but it would be over the span of your career, just where you were able to see something because of your lines of sight into the organization or into investing. What comes to mind when we ask for a finance strategic moment?
Yeah. So when I think about a strategic moment, like what does that mean to me? It means how did it help me shape my thinking going forward, where I would basically constantly look back and say that was a foundational period where the learnings were plentiful. And what stands out to me more than anything was if I go back to the 2016 and 17 period, I was running an investment fund, and we were very close with a internet marketplace, a public company that was an internet marketplace. And it was a mission driven company that was focusing on the artisan space and had a real cultural fanfare with it. But when you looked at the finances of the company, they were really underperforming. And so you had this dichotomy, if you will, between a great customer experience, a really good ecosystem, and a poor financial profile. And one of the things that we did from an investment standpoint is that we really got quite close to management and the board and involved with letters and insights and trying to either help educate or politely push and prod on ways that they could run the business, particularly from a financial metric standpoint, that can both allow them to fulfill their mission, but also create a sustainable economic engine that allowed them to be there for a long time. And one of the reason why it was such a moment in time for me is we really pulled back the curtain, if you will, on what were the mistakes that they were making and what was driving those mistakes. And a lot of it you started to see were the differences in either insight or influence between the CFO and the CEO, how the board was or was not involved, mostly not involved relative to what was happening at the company. And what got misplaced in the messaging, I think, to the company and the employees themselves is that the mission outweighed the capitalist mindset, if you will. And I think the mistake in that was that in order to fulfill your long-term mission, you also have to be a profitable, sustainable company so that way you can continue to reinvest and give your ecosystem, your customers, more goodness over time so they can continue to flourish and the business can continue to grow. And it's a quite interrelated relationship between wanting to grow the business and grow profits while also serving the customer very well. And they're not at odds with each other. And that insight and that moment in time, the relationships and the conversations, the influence and the outcomes were foundational to basically everything that we did, even the investment business after that, and certainly in my thoughts and decision making at Acorns. And the thing that is great about Acorns is we have a deep mission. We originally started with serving the up and coming and helping them grow to build their financial wellness. We're now dead center on families in addition, but of the same basic construct. And if we want to serve our customers for the long term, we also have to grow and become bigger and sustain our profits and then build them over time as well, whether that's for acquisitions or just broad-based financial health. And it's a really healthy thing to have a business that operates in a healthy manner and then reinvest back for their customers. So there's a lot of nuance in that. We could totally unpack it, but seeing the business that we were focused on at the time go through that transition. And today, if you looked at the market cap of the company, it's about 10x what it was then. And so a phenomenal set of outcomes off of that. But getting under the covers, if you will, really was a fascinating foundational moment for me.
37,025-1. These are the three numbers to remember to get the visibility and control you need to make the right business decisions instantly. 37,000. That's the number of businesses which have upgraded to NetSuite by Oracle. NetSuite is the #1 cloud financial system, streamlining accounting, financial management, inventory, HR, and more. 25. NetSuite turns 25 this year. That's 25 years of helping businesses do more with less, close their books in days, not weeks, and drive down expenses. 1. Because your business is one of a kind, you should get a customized solution for all of your KPIs in one efficient system and with one source of truth. Manage risk, get reliable forecasts, and improve margins. Everything you need, all in one place. Right now, download NetSuite's popular KPI checklist designed to give you consistently excellent performance, absolutely free, at netsuite.com/KPI. That's netsuite.com/KPI.
We are going to jump to what we refer to as our mentoring round, where in this question, I think was written with you in mind. We always ask about when you first step into a CFO role, what maybe you didn't expect. And again, one thing's you're really changing your environment here. I know you were a chief investment officer for a few days, and you sort of had a CFO mentor. And you can characterize it differently for me, but you had the other CFO who was there, and there was an acquisition underway. You became very involved very quickly, I would imagine. But then once you got the title, you looked around and you said, I didn't know this was part of the job. And again, you had more stakeholders than perhaps you ever had before. What would you tell us?
Yeah, this is a fairly straightforward question. So I think we're all probably guilty of this in the domains that we know really well. But in finance and as CFO, the easiest way to think about it is you know something so deeply and you're so comfortable with the subject matter, and there are so many people who are not. It's sort of like what's the beauty of Acorns. The beauty of Acorns is the financial markets are really complicated. We make things really simple, and that's why customers love us. The same thing is true from a CFO role perspective. I might know an income statement really well, and I might just start speaking in acronyms like P&Ls and EBITDAs and incremental margins and all these things that are just easy for me because I've been doing it for 20 years. But when you then go speak to maybe even the executive team, it could be for customers. I mean, it could be for employees. It could be any constituent that is around the company. You start to realize that everyone's got different domain expertise, and not everyone is familiar with this. And so you've got to learn how to speak in common language. You have to learn how to break things down into simple explanatory building blocks so people can follow you along. And it would be no different than if I was in an engineering meeting and they wanted to tell me what was going on in their space, and they got deep into architecture of code and other things that might be irrelevant or just not my domain expertise. Same thing that applies here. And I see the mistake being made time and time again. So one of the things we work on the team with is repetition of communication, simplification of messaging, allow for people for follow-ups, graphics, and so forth. And so that was a real learning experience for me, especially coming from the investor backdrop. You mentioned investment banking before. When you work in finance, everyone around you understands finance. I mean, it's common, right? And so it fosters a technical language set that's not transferable or shouldn't be transferable to working at a corporate enterprise. And so unwinding those behavior patterns for me and learning how to, and I'm still learning all the time, but learning how to speak in simplified ways
Yep.
about complex matters was just a fundamental transition. So that would be my
Yep.
observation from day one.
Yep, excellent. Thank you for that. We're going to ask you, we always like to ask our guests to reflect a little on the personal side. We're wondering if there's something most of your colleagues might not know about you, something, an interest you have, something maybe not on the professional side, don't know, but anything come to mind, something most of your colleagues might not know about you.
I mean, I think they're starting to know this because I reference it a lot, but I get geeky about books. I for the most part, I don't read for just pure pleasure. I try to read to really learn something. Whether it be nonfiction based, finance oriented, emotional type of things, not science fiction, but science oriented as well. And then I reference it a lot for people. So I think sometimes people perceive, oh, you're busy, and so you may not. How could you have time for this? And then I think
Yeah,
like,
well,
oops.
that's the question then. How do you make time for it? I mean, how did you do this as a CFO? It has to be really hard.
Well, I think for the most part, I don't want to get into politics, but you look at like many past presidents and you like learn they've read like hundreds of books while they're president, and you think like, where the hell, how did they find the
They
time?
found it. Yeah.
Yeah, so if they found it, like we all could find
Yeah.
it. But at night, you bang out a whole bunch of pages. The weekend, Saturday or Sunday morning, flights to the degree, whether personal travel, work travel, or so forth. But it's not about, you don't have to get through everything within a week, but the idea is have 2 or 3 books that you're referencing, reading through. Sometimes I don't mind if you skip a little bit, but as long as you're getting the context of what's in there, there's just so much opportunity in books. So that's probably the thing that is a little wrinkle, and where I try to build up my knowledge base and enrich my perspective on things.
Okay, thank you for that. This is, of course, great segue. We're going to ask you for a book recommendation.
Huh.
Your choice doesn't have to be a business book. Might be something you just escape with, or one that just made you think hard.
So I just gave 2 book recommendations so let me say it differently. I had dinner last Friday night with another couple. They were talking about their teenage kids, saying that they wanted to educate them financially. They asked me, what couple stocks should the kids follow to learn and whatever. And I was like, that's great in theory. But the reality is if you think about long-term investing, what Acorns does in terms of diversified portfolios, that's really the best way to invest and think about long-term wealth accumulation. Within that, I was like, there's 2 books. And I ended up saying, like, you should have your kids read these 2 books, and then let's go talk about it. In fact, I said they should probably read them twice. If they read them twice, maybe even underline them like a textbook, you get a lot out of them. So it was Automatic Millionaire was one of them. And then the other one was The Psychology of Money. And collectively, these 2 books, I think, really cement one, the power and benefit of starting early, starting small, making investing a habit, how to think about the conversation where people get stuck of, I have nothing left at the end of the month, how to reverse that mentality and get themselves started. Then there's all the emotional roller coasters that come with money, and how there might be a textbook about how to deal with money, but money is an emotion, and there's that emotional connectivity comes from whether it's our childhood or other experiences that we've had. And I think both books break them down really well. From a pure pleasure standpoint, I'm in the middle of reading the second book from the 3 Body Problem trilogy, and that is a crazy cool story that I find fascinating and so forth. So that's where I'm at right now.
Great selections for us. We haven't had them before, so appreciate it. Always great to get some new books on the shelf. So we're up to our final question, Seth, and this is where we're going to just ask you to look forward for us over the next 12 months. Wondering what your CFO priorities would be for the next 12 months. What would those be?
So for us at Acorns, the key thing is we have a very rich roadmap of what we're trying to accomplish. We take our mission seriously, and we think that the opportunity to bring a whole suite of tools of financial wealth making to Americans and abroad doesn't exist in the way that we want to do it from a systematic approach. So that's the backdrop of my answer. And so my answer within that is, how do we do that in the most focused way? How do you put the most amount of wood behind the fewest arrows to have the biggest impact for the customer, but to do it from an efficiency standpoint, to do it with the resources that we have, to think about incremental investments in a thoughtful manner so you can drive great customer behavior, great economic opportunities for the company, but be able to also leverage our profits all at the same time. And I think that efficiency and focus is hard. When you look at the world of opportunities, there's so many things out there. So that's the most important thing. I think my other job in terms of looking forward is to also just be the constant worrier about what could go wrong, right? I mean, I just think it's appropriate as a CFO to balance opportunity with risk. And the world is always dynamic. I actually don't ascribe to the theory that like it's worse today than ever before, because actually, it's really funny. My wife has a series of Time magazine covers from the 1960s, and you look at them, and it's like all the same topics that we see today. And so, generationally, like we've been here 100 times. But the point being, lots of unknowns can constantly happen. And in the world of unknowns, how do you make sure that you're allowing the business to stay protected while also leaning forward and be aggressive in the places it needs to be? And so, balancing efficiency and focus with prudence is where I spend my time.
Thank you, Seth Wunder. Thank you for joining us on CFO Thought Leader.
Thank you.
Hello, listeners. Jack here. I hope you've been enjoying some of our recent CFO Thought Leader episodes. To better serve you, we need your feedback. And our 2024 listener survey is now live. What do you like about CFO Thought Leader? What don't you like about CFO Thought Leader? This is what we call continuous improvement. We want to serve you better, but we can only do that by hearing from you. You'll find our 2024 survey right on the nav bar at cfothoughtleader.com. To demonstrate our gratitude, survey takers will receive a $10 savings coupon on the purchase of our new book, The CFO 500. Take the survey and the coupon is yours. Please help us serve you better. And as always, thank you for listening.